Homeownership offers advantages over renting, including a stable living environment, predictable monthly payments, and the freedom to make modifications and make your home your own. One of the biggest perks of home ownership is the opportunity to build wealth over time. Researchers at the Urban Institute found that homeownership is financially beneficial for most families. And a study by the Joint Center for Housing Studies at Harvard University showed that the median net worth of homeowners can be significantly greater than that of renters in some areas. So how does purchasing a home help you build wealth? And what steps should you take to maximize the potential of your investment? Stay tuned to find out. Hi, my name's Adrienne Marks and I'm a real estate broker in San Clemente, California. In today's video, I'm breaking down how to harness the power of home equity for a secure and financial future. And by the way, this video is for informational purposes only. It's not intended to be financial advice. You really should consult a financial professional for advice regarding your individual needs. Now let's dive in. First, let's cover what is home equity. Home equity is the difference between what your home is worth and the amount that you owe on your mortgage. So for example, if your home would currently sell for $250,000 and the remaining balance on your mortgage is $200,000, then you would have $50,000 in home equity. The equity in your home is considered a non-liquid asset. It's your money, but rather than sitting in a bank account, it's providing you with a place to live. And when you factor in the potential of appreciation, an investment in real estate will likely offer a better return than any savings account available today. How does home equity build wealth? A mortgage payment is a type of forced savings for home buyers. When you make a payment each month, a portion of the payment goes towards the interest and the other portion goes towards paying off your principal or your loan balance. That means the amount of the money you owe the bank is reduced every month. As your loan balance goes down, your home equity goes up. Unlike other assets you borrow to purchase, the value of your home generally increases or appreciates over time. For example, when you pay off your car loan after 5 or 7 years, you'll own it outright. But when you sell it, the car is going to be worth much less than when you bought it, unless you're lucky enough to have some kind of collector's car. Now, when you buy a house, its value typically raises over time. So when you sell, not only will you have grown your equity through your monthly mortgage payments, but in many cases, your home's market value will be higher than what you originally paid. Even if you only put down a small 10% down payment or just paid a small portion of your mortgage, you get to keep 100% of your property's appreciated value. That's the wealth building power of real estate. Now let me put the disclaimer out there that at times housing values do go down. So it's important for you to always be aware of the current market value. Even if the value of your home goes down, it doesn't have a true effect on you unless you must sell. Now that you understand the benefits of building equity, you might be wondering, how can you speed it up? There are two basic ways to increase the equity in your home. You can work at paying down your mortgage, and we shared earlier that as your equity goes up, your mortgage balance goes down. So paying down your mortgage is one way to increase the equity in your home. Some homeowners do this by adding a little extra to their payment each month or by making one additional mortgage payment per year. Sometimes you get a lump sum of money like an annual bonus, your tax return, and inheritance, and you can put a lump sum of that towards the principal balance of your loan. Before you make any extra payments, though, you want to make sure you check with your lender about the specific terms for your loan. Some loans have prepayment penalties. The other thing you want to make sure of is that when you do make an additional payment, that the money is applied directly to the loan principal. Another option to pay off your mortgage faster is to decrease your amortization period. For example, if you can afford a larger payment, you might consider refinancing your 30-year mortgage to a 15-year mortgage. So not only will you grow your equity faster, you could also save a ton of money in interest over the life of the loan. Another trick that allows you to skip the cost of refinancing is to use an online loan amortization calculator to find out what payment you should make each month in order to pay off your balance in whatever amount of years you want to shoot for. Okay, another way to increase your equity is to raise your home's market value. While many factors that contribute to your property's appreciation are out of your control, there are things that you can do to increase what it's worth. For instance, many homeowners enjoy do-it-yourself projects that can add value at relatively low cost. Others choose to invest in larger strategic upgrades. Keep in mind you won't necessarily get back every dollar that you invest in your home. In fact, a Remodeling Magazine's latest cost versus value report showed that a project with the highest return on investment is replacing the garage door that can run you about $3,600 depending on how fancy you get. But it's expected that you'll recoup 97.5% of the cost to make that change. In contrast, if you do an upscale kitchen remodel that can be upwards of $130,000, you can expect to get about 60% back on your investment for that. Of course, keeping up with routine maintenance is the most important thing you can do to protect your property's value. If you neglect to maintain your home structure and the systems that it has, like your air conditioning, it could have a negative impact on its value and reduce your home equity. So be sure to stay on top of all the maintenance needs for your house. Some people ask, how do I access my home equity if I need it? When you put your money in a checking or savings account, it's easy to withdraw. But tapping into your home equity is a little more complicated. The primary way that people access their home equity is by selling their house. Many sellers will use their equity as a down payment on a new home, or sometimes they use the equity to supplement their income or their retirement savings. We're quickly approaching the time of year when people put their homes on the market. If this is something you're considering doing, you might want to think about doing it sooner rather than later, because there's going to be a lot more competition out there come April. What if you want to access the equity in your home and still want to live in it? Maybe you want to refinance for a home renovation, consolidate debt, or pay for college. To do that, you will need to take out a loan using your equity as collateral. There are several ways to borrow against your home's equity depending on your needs and qualifications. One way to do it is through a second mortgage. A second mortgage is also known as a home equity loan, and it's structured similarly to your primary mortgage. You'll borrow a lump sum of money and you're responsible for paying it back with interest over a set period of time. Most second mortgages have fixed interest rates, and the nice thing about that is the predictability of the monthly payment. Keep in mind, if you take out a home equity loan, you're going to be making payments on both your primary and secondary loans, so make sure that you budget accordingly. A cash out refinance is another way. With a cash out refinance, you're essentially paying off your existing loan and getting a new loan for a much higher amount so that you can take access of that equity. So here's an example. Your current loan balance is $300,000. The current market value of your house is $750,000. So you take out a new loan for, let's say, $600,000, you pay off the original $300,000, and voila, you have $300,000 in your pocket. This option might be preferable to a second mortgage if you have a high interest on your current mortgage, or if you just want to make one payment per month. A third option is the home equity line of credit, or a HELOC. This is a revolving line of credit similar to a credit card that allows you to draw money out as you need it instead of taking out a big lump sum all at once. A HELOC may come with a checkbook or a debit card so you can easily access the funds. You'll need to make payments on the amount of money that you've actually pulled out. So similar to a credit card, the interest rate on a HELOC is variable, so your payment each month could change depending on how much you borrow and how the interest rates are fluctuating. Lastly, we'll talk briefly about a reverse mortgage. This type of mortgage allows qualifying seniors to borrow against the equity in their home to supplement their retirement funds. In most cases, the loan plus interest doesn't need to be repaid until the homeowners sell, move, or are deceased. Tapping into home equity may be a good option for some homeowners, but it's important to do your research first. In some cases, another type of loan or financing method might offer a lower interest rate or better terms to fit your needs. And it's important to remember that defaulting on any of these loans could result in foreclosure, so you want to make sure that you're thinking about these with whatever changes you're making. In the last few days, interest rates have gone down again. Lenders are so busy right now because people are taking advantage of low rates to buy a new home, or they're doing a refinance to get better interest rate, or perhaps they're doing a cash out refinance. If you think this is something you might be interested in doing to take advantage of the equity you have in your home, let me know and I'm happy to connect you with one of my trusted lender partners. Here at Adrienne Marks Real Estate, we are here to help you. We work with buyers to find the perfect home to begin their wealth building journey and also offer free assistance to existing homeowners who want to know their home's current market value to refinance or secure a home equity loan. And of course, when you're ready to sell, we can help you do that too. Hey, I appreciate you watching today's video. In case you don't know, I put out videos each week, so hit the subscribe button and the bell so you'll be notified the next time a video is out. Thanks for tuning in, and I'll see you next week.